call this work session to order on AO 2020-57, Proposed Alcohol Tax Collection and Enforcement. Let's start with introductions. Straight on this side.
Austin Quinn Davidson.
Pete Peterson.
Felix Rivera.
Christopher Constant.
Dan Moore, Treasury.
Paul Rudd, Treasury.
Alex Lipka, Chief Fiscal Officer.
All right, and then on the phone, Assembly members, Crystal Kennedy.
Here.
Suzanne LaFrance.
Here.
Forrest Dunbar.
Here.
Jamie Allard.
Here.
And John Weddleton.
Here.
All right, and then I also want to confirm on the phone, do we have someone from the Alaska Hospitality Retailers?
Yes, you do. You have Sylvia Villamizes, Executive Director.
Great, thank you, Sylvia. Do we have someone from CHAR? Okay, I'm not hearing anyone. Do we have someone from the Alaska Brewers Guild? Okay, so those were the only ones that I was told might attend. If there are other groups who are on the line, when we get to asking questions, I'll invite any other groups on the line who want to provide input to do so. So I'll go ahead and turn it over to Treasury.
This is Alex Lipka. I just want to make a note that Dan Moore as treasurer and Paul Reiswig as his chief admin have done an extraordinary job since this was passed on the ballot in April. They have done extensive work with the industry, met multiple times, had multiple revisions, and so as you walk through this process, it reflects some extraordinary and very timely work on behalf of the Treasury staff. So with that, thank you, Dan.
Okay. All right. So hopefully you guys can hear me okay. I'll probably...
Mr. Chair, Mr. Chair, this is Sylvia.
Yes,
Can
Sylvia.
I have John Petit also on the line. He's our board secretary for the Alaska Hospitality Retailers.
Okay, got it. Thank you.
Okay, so I will go ahead and get started. Thanks, Mr. Chair, for the opportunity for the work session. Today we're going to talk about the alcohol beverages retail sales tax, and this particular ordinance is focused on administration and enforcement of this new tax. And if we can, I guess for all the online participants, hopefully they know the PowerPoint is, I believe it's posted to the clerk's website, so it should be available there if they want to follow along. Okay, so I'm just going to go page by page. If we can maybe allow me to get to at least page 7, and then maybe open up for questions, and then I'll take questions, and then we'll finish it off if that's okay. So on page 2 of the work session materials, this is a summary timeline. We call it phase 1. When we finish the work session, our presentation will have a phase 2 timeline. But we just want to put in perspective here, kind of what we've been dealing with so far. Obviously, the major point was when the voters approved ballot measure number 13. That was on April 7th. Within 1 week of that time period, we immediately had a baseline draft ordinance, and we were able to do that actually in great tribute to Dean Gates, because the year before, when there was a prior ballot ordinance, we thought that might pass, and we tried to be prepared for that. So we had a decent starting draft, and what we did is we were fairly aggressive in getting this draft out to the industry. We were very concerned about COVID-19 and the inability to connect with the industry. So to further enhance our ability to connect with the industry, we reached out to former U.S. Senator Mark Begich, who's part of the Northern Compass Group, and he had all the contacts already as a result of the lead up to the April 7th election. And so he was a tremendous resource, he and his staff, to be able to circulate the ordinance and to encourage the various groups in the alcohol industry to review what we were proposing and to give their input. And I can say the Alaska Hospitality Retailers was one of the first groups to give us input. It was very well received, and we tried to incorporate a lot of what they suggested. So we absolutely appreciate all that input. So what we did, as Alex said, we had a series of drafts. I think By the time we were done talking to the industry, we were on draft number 3. And we had both items in writing, and we had people talking to us and sharing their thoughts or suggestions in various ways. By the end of the 5-week period, which was on May 18th, we had a live dialogue. It might have been a Teams meeting, something like that, with all the different groups all at once. And what we covered were all of the hospitality retailers' prior suggestions, as well as some new suggestions that have been received from CHAR and from the Brewers Group. And then we talked through, I think it lasted 2 or 2.5 hours, a very in-depth discussion. And we agreed to a number of those changes that they had asked for. There were some changes that we did not agree to, and we tried to explain why. And a lot of it is really based on our need to have common, consistent rules that we feel are going to be most effective for protecting the source of the revenue. We also emphasize that our goal in this ordinance is to try to maximize the revenue so it can go for the dedicated purpose that the voters approved. So that's kind of that 5-week period, extremely intense, lots of research, lots of dialogue going on. And on April 21st, the election was officially certified, so we knew it was also fairly close, so we didn't even know for a while there how it might turn out, but we went ahead and just started working on it. By May 22nd, we were able to have the official draft that ended up being introduced to the Assembly posted to a new webpage specific for alcohol tax. Treasury has web pages for all the different taxes that we administer. And we also posted, in addition to posting the ordinance for review by the industry and any of the public, we also posted some additional early information to try to give them an idea of what will be coming down the road. That website will get updated many, many times between now and February 1st of next year. The introduction of the ordinance was on June 2nd, and then the approval and the public hearing is set for next Tuesday, June 23rd. And what's before the Assembly now is an S version. We'll explain that in just a little bit. Okay, so if we go to page 3 of the presentation, we're just going to keep kind of drilling down a little bit here. And so what this is basically saying is our initial approach, or what's been given to the city to work on, are really 2 areas. One, well, first and foremost, we know it's a 5% tax. It's only on retail alcohol, and it's dedicated to public safety and health purposes. So we know that's kind of our marching authority going out of the gate. There's 2 steps that we sort of describe here. The first step is an administrative and enforcement ordinance, which is the one before you next Tuesday night. That absolutely needs to be approved by the end of June, and we'll explain that in a little bit. We have a lot more work to do, but we definitely need the rules of the game, both for us and for the industry, to be put in place, and then from there we design and develop our database. And so it's very important to kind of lock into these fundamental rules now. The second step, which is a different step, is one that I know the Assembly is actively working on, and will be for the next several months, I believe. And that will involve, I believe, the Assembly Counsel, Dean Gates, coming forward at a later date with an ordinance that will speak more directly about the dedication funds and how those will be used. Our ordinance does not address that at all. We're strictly focused on just getting the rules and the database and all that stuff set up. So the second half of page 3, I already mentioned it covers administration enforcement. The second bullet point in the second half here talks about the state of Alaska. One thing that's very important, we learned this with marijuana, is we need to be in sync with whatever rules and regulations exist at the state level. So when you see definitions in our proposed ordinance, where there are common definitions that are shared by the state, we adopt the state's definition. We don't want to somehow cause confusion or go counter to that. We also have many different cross-references throughout our ordinance which cite back to specific authorities the state grants for alcohol operators. And that way, if the state changes its statutes or regulations, our code will automatically follow those changes without us having to come back and amend the code. In order for an operator, a retail alcohol operator here in Anchorage, to be able to get licensed, or I guess say registered with us, they will have to produce a valid Alaska business license and a valid retail license to sell alcohol and or a permit to sell alcohol. The provisions in our code that you see in this ordinance before you are very consistent with other self-reported chapters in the code that are there. The reason for this is the more we can make our approach to administering and enforcing self-reported taxes the same, the more it gives us a chance to have clarity, both for us and for the business community, and to be as efficient as possible. So we approach things very, very similarly across the board for all self-reported taxes. Okay? If we go on to page 4, on page 4, this is just diving a little bit deeper, but the specific areas, if you were to say what chapters in the code did we model ourselves after, we modeled extensively after other, what we call special sales tax chapters. And these would include room tax, rental vehicle tax, and marijuana tax. And so alcohol tax is in that same ballpark with those taxes. So that's where our standard has come from. When it comes to setting the rules and standards in these self-reported tax chapter codes, I just want to emphasize, this is the second bullet, that these codes have been developed over many, many years. Room tax has been in existence for decades. Rental vehicle has been in existence since year 2000. Marijuana is much more recent. But we have learned in all sorts of ways what elements or what specific wording in the code is going to be most effective for us to be able to collect the tax. And also, it provides rules that are more and more clear with the business community so that they know what to follow. So it's accumulation of experience and knowledge that we have that is built and baked into these code chapters. The third bullet, I just want to emphasize this ordinance you have before you. I think it's like 31 pages. It's pretty long. There's many, many sections to it. But really, the code is, if you are, and most everyone will be, a compliant, typical operator with retail alcohol, there's only going to be a few sections of the code that are going to immediately apply and then sort of apply on an ongoing basis. That involves getting registered, maintaining your eligibility to operate, and then collecting, reporting, and remitting the tax. These are the primary sections of code that deal with 90-some% of all the operators. The remainder of the code is really focused on the non-compliant operators down the road. Everyone starts out fresh. Everyone's assumed they're going to be great, and that's all fine. We just know from our experience there is the chance that some small percentage of operators may become non-compliant at some point in time. So that is by far the majority of the code is to deal with those type of non-compliant operators that might occur down the road. So the last comment is just our whole purpose in Treasury is to try to prevent revenue loss. And we do that by having a very formal code with some significant consequences if you're not compliant, and then also being able to audit the operations of these businesses to make sure that what they're self-reporting is actually correct. And we do everything in a progressive basis. So anything you see in the code is done step by step. If there is an action that we take that is adverse to an operator, that operator has the chance every single time to appeal to the administrative hearing also. So there's always the right to appeal if they disagree with some action that we've taken against them. Okay, if we go on to page 5 and 6 are very much, they're part of the same thing. Because it's a 31-page ordinance, I thought it might just be helpful just to see the table of contents, to see what sections are covered. I'm not going to talk about every one of these, but I'm just going to highlight a few things. So on page 5, that's the first page of the table. Every single chapter that deals with taxes has to have definitions. It's extremely important so you know what is actually going to be taxed. You also have to specify the rate of the tax. That's 0.030. And if there's exemptions, and every chapter does have some level of exemptions. That's 0.40. And then we talk about how the monies need to be segregated. They're collected in the name of the city. It's a fiduciary duty. All those different things. And there's a whole series of subchapters, subsections that deal with certificate of registration. And depending on whether it's a new certificate or a renewal or denial or an expiration, all those subsections deal with the different stages of certificate of registration. The fiduciary duties is the last one listed there, and that is a fundamental part of the self-reported tax. They're collecting in the name of the municipality of Anchorage. On page 6, this is a continuation of the chapters. The very first one here says security for fiduciary performance. We'll talk about that in a little bit, but that is something to protect the city's interest if someone becomes delinquent. Then there's the standard stuff that a compliant operator would have. When do they file tax returns? How do they remit? Can they ever amend their returns? How do we apply payments? How do we do refunds, etc. Because they're self-reported and it's information from the businesses, everything is confidential. So we're very careful about that. We expect businesses to maintain records over a specified period of time so that there's the ability to audit after the fact if we need to. And then on the second half of page 6, the right half column, these are where you get into more serious violations. And so there could be fraud involved, some type of tax avoidance. We might have to file liens, assess penalties, interest costs. Those are all much more extreme. They don't happen very often, but they're in the code if we need to use them. The very last part of the code is 280. That's remedies for a person aggrieved. And that's what I was referring to earlier about administrative hearing officer. That option is always available to any operator. Okay? And the last page I'll highlight here, and then I'll pause for questions, are the key highlights. Okay, so I've emphasized that AMC 1265, which is the new chapter for retail alcohol, is very much similar to other chapters that we already have in existence. This particular page, page 7, is trying to highlight where we made some changes in particular for the alcohol industry, knowing what that industry involves. So we try to be much more aware of that. When we received input from the industry, we received some input from Mark Begich's firm, and we had our own research that we did about many other jurisdictions. So based on this, here are the sort of more unique type of elements that we put into the code that you wouldn't necessarily see in other similar chapters. The first one is one-time registration rather than recurring. The industry, as you might imagine, is happy with this. What our thinking is, the registration process is a very formal process. It can be quite time-consuming. And rather than require a recurring registration every year or every 2 years, we did not choose to do that because we're dealing with 450 entities. That's a lot of entities. Just to put that in perspective, in terms of room tax operators, we have 242. And that doesn't count Airbnb and VRBO. They're kind of their own special registered entities. But it's more than double. It's about double. This is slightly less than double of what we have for room tax. All the other self-reported taxes have anywhere from like 30 to 45. So it's a huge volume of operators that we're dealing with. And to go through that registration process every year or every 2 years didn't make sense to us. It just doesn't seem that efficient. They will be required to re-register anytime there's a significant change in their business, and that's specified in the code. The second bullet is no initial filing fee. This is because this particular tax that was approved by the voters is outside the tax cap. And it also is, and what the voters approved, that the cost of administering and enforcing the tax can be paid with the tax itself. So there's really no need to charge a filing fee if we're already able to recoup the cost of our effort through the tax itself. So we got rid of that. The third one is a surety bond. In other tax chapters, as a default out of the gate, we require a surety bond. But because the alcohol industry is a large established industry, they're not brand new, we did not feel there was a need to have an automatic default security deposit or bond. And so we waive that as a default. However, if we review an application and we see that there is a declared history and they're required to declare, if they have a history of theft or of other past revocations or something very serious, then we may elect to require a security bond out of the gate. The only other time a security bond will come into play is if they become a registered operator and they go more than 2 months of delinquency. That triggers a bond from that point forward. The bond doesn't stay forever. It's for a 2-year period if they have basically 2 years of timely payment. And that's basically establishing credit with the city is effectively what it's doing. The fourth bullet on page 7 talks about the filing. Instead of quarterly, we go monthly. There's a lot of money at stake. And so we felt monthly is the best for the city. It also is the prevailing standard in all the research. And we researched places in Alaska, about 10 or 12 different jurisdictions around the country. So it's very, very common to have monthly filing. The next one is to sort of keep on board with trying to push technology. We know we're now in a world where online filing is a reality. We've been working on online filing for room tax for a number of months now, and it's probably about 90% complete. So we hope to test out online filing with room tax operators in third or fourth quarter this year and first quarter next year. If we are ready in time for the alcohol industry, we want to require online filing because we have so many entities to deal with. It makes it more efficient for us and for the business. And so we want that to be the default. Now there will be an opportunity for them to get a waiver. They can tell us why they somehow cannot do online filing. And they can always just choose to do paper filing. But if they do paper filing, there will be a fee that goes along with that. So then that's specified in code. The next bullet, 3 bullets from the end here. Special event retailers with a state of Alaska permit are also addressed in code. One thing we realize is everybody's not an established, package store, bar, restaurant, that type of thing. There's a lot of special events that occur. So it could be a fundraiser, it could be something related to a nonprofit, a private wedding party. I mean, there's all sorts of things. But if the state of Alaska requires that particular event to have a special permit, then they also have to come to us and basically get permission in advance that they're going to have this event. And then we cross-reference the permit that they have received. There's also some coordination that we may be able to do with Parks and Rec because they have some similar provisions. The next bullet right after that goes hand in glove with the special permit. We realize that there are a lot of much smaller gatherings that really are not what we are trying to focus on. So we propose a de minimis rule in here so that if you're a special permit holder, which means you have a special event on a day or a weekend, and your anticipated gross alcohol sales are going to be less than $5,000, we're not requiring anything of those types of entities. We feel that is way too small, way too varied for us to try to track either for us or for them to register. It's truly de minimis. And when we say that, it's $250 of tax that we're giving up each time. It's not a lot of money. And then the last thing is on prohibited acts. Every self-report tax has a list of prohibited acts. We included the opportunity for the city to protest, which is, as you all know, I know from prior meetings, there is an opportunity to protest on alcohol-related issues. And so that's in there. And we also reference wholesalers. So if there's a non-compliant operator, a retail operator, who is become non-compliant, we would then notify all wholesalers that they are on notice that there's a non-compliant operator, and we would ask that they cease providing alcohol to that non-compliant operator until they become compliant. And that would be putting them on notice of that. So that is the last provision. And with any type of prohibited act or special notice given to anybody, there will always be due process. There will be an opportunity in writing to say this is the instance that's occurring. You are somehow part of this instance, and you have X number of days to respond or to cure the situation. And you also have the opportunity to appeal to the hearing officer. So that is the summary of the meat of the ordinance. There are some other parts that I'll finish off, but I think this is a good time to stop and see if there's questions.
Thanks. Mr. Constant.
Actually, you got to my question is how to address the special events question because it doesn't really fit in all of this.
Thanks. Ms. Quinn Davids.
Thanks, Mr. Rivera. So, can you talk to me again about, there's a lot of information we're taking in, about the fee and why you opted not to have it? I guess I'm not super compelled by the argument that, oh, we're bringing in revenue, so we can use that to offset. It's like, well, we're bringing in revenue for tobacco and marijuana and all kinds of other taxes, and we're not, are we waiving the filing fee for those entities?
No, we're not, but we're dealing with a lot smaller volume, and it is part of our effort. Anything we track, whether it's a fee or anything, is additional work. And when you multiply that by 450, that's a lot for us to take on. So we felt that because it does reduce the burden on us, and unlike all those other taxes, this is outside the cap, that we can then cover that cost. In some ways, people would say, well, if you're covering your costs already outside the cap, why do you need to charge a fee? And I think that's a legitimate question. So our answer to that is just we won't charge the fee. And it's specifically because this is outside the cap. Marijuana started outside the cap and then that went away, but this is perpetual. So that was our base. If you want to add a fee in, you can, but I can say, probably the alcohol industry would prefer not to have a fee.
Oh, I'm sure.
And in part, and I will say too, we did think about the administrative cost, right? Because anytime you have a new tax, that is additional responsibility on part of the business. So the more we can say, no surety bond out of the gate, no filing fee, no recurring registration, those are all saved cost savings for the business. And so we're trying to balance it out. I mean, that's kind of our mindset is what we're doing. So.
But you didn't do that for marijuana or tobacco. I mean, it just strikes me as pretty inequitable.
It is something where we look at this as an established industry, and it's a very large industry. So we try to make accommodation because of that.
Why?
Well, I just
mean, it seems
explained
like
why.
a policy call.
It is a policy call.
To
If you wanna put
decide
it in, you
that
can.
alcohol should have different rules. A taxed entity that's an alcohol business should have different rules than a taxed entity that's a marijuana business. Why? Not just because there are more of them or it's big. I mean, that to me doesn't really matter. It's more of a policy call. And so I guess if you were working, I don't know if others in the administration want to speak to why, it seems like we're giving preference to one industry, and I'm not really comfortable with that. Particularly when that preference results in less money to do what the people want to do with the money.
Through the chair. So you're right, Austin, Ms. Davidson. It is a policy call. I think as we explained, there was an extraordinary amount of effort, engagement with the industry to reach a point that made sense. But as Mr. Moore talks about, what may not be apparent is the Treasury staff is not large. They have, I think I've said before, 4 people that collect all the tax. And so they looked at this as an opportunity for them to reduce their workload while trying to meet the industry halfway. But as Dan said, if it's the goal of the assembly that a fee should be charged, then you can, of course, amend it. It was our recommendation to make the Treasury staff as efficient as possible, which is why we came up with this recommendation.
Can I ask how big the fee is for the other entities and what the difference in revenue would be over, like, annually, for instance? Do you know? And then I guess the second question is revenue able to process that? Like, are you able to do it? It's just easier if you don't have to. Or would you have to hire another person? Or what are the sort of practical implications of needing to change there?
Right. Just a moment here. I don't have the registration fee on this matrix, but we can get it for you and let you know. It's not big dollars for the other self-report taxes. For 450 entities, if it were $50 or $100, I mean that's quite a bit of money. But if I can, I'll get back to you later.
Sure. And just if you don't mind adding to, and maybe if you could include all of the members
sure.
in case I or others are interested in bringing an amendment.
Okay.
It just seems unfair to me in how we treat tax entities, and I'm a little uncomfortable with that.
Okay, no problem.
Thanks. So both the how much it would, what's the total, and then that you expect, and then would you be able to handle it, or what would be the practical impacts on the department?
Okay, sure.
Thanks.
Thank you. Ms. Olatel?
Thank you, Mr. Chair. Ms. Quinn Davidson's got kind of touches on the question I have is, how similar is this code provision or this section of code you're putting forth to the marijuana taxes? It feels like we're creating a whole system where we have marijuana taxation and I understand one's above the cap and one's below the cap, but it feels redundant because I really want to see the two as equitable as possible and as streamlined and as close together as possible. So I guess, do you know how similar it is to marijuana taxes, or would we need someone to maybe do a crosswalk to figure out where the significant differences lie?
Are you talking about anything in particular or in general? Or?
Honestly, with 30-some pages of code, I don't know.
Right. What's on page 7 are the distinguishing elements. So these are things that you would probably not see in other self-reported chapters, right? So that's why we're highlighting them here.
I guess the better way to ask the question is maybe, is there some reason our marijuana taxation process couldn't just be used for alcohol?
Yeah, I view, this is my view, but marijuana was a brand new industry to us and to the state. It's also a cash-based industry. It's highly risky, okay? So we have to, if you collect cash, your opportunity to take cash and use it for other things is high risk. So we require a surety bond because of the new industry and because it's a cash-based industry. We have to have a surety bond. We also started out with 2 marijuana entities. It then grew to 22, now it's like 35, 39. It's very, very small in terms of quantity. So we have to protect the city's interest with the fiduciary bond with the nature of that industry. Alcohol is a very established industry. They've been in the game for a very, very long time. So we don't see the immediate risk or the uncertainty with alcohol that we have with marijuana. So based on the time of when things came into play, that's important. That's very important. And so that also is something where we have it with marijuana, we have to coordinate very heavily with the clerk's office, right? There's a huge process to get approved. It's very, very involved. So our effort is also much more involved with marijuana than it would be with alcohol. So our fee that we charge on marijuana, there is a fee because of the extra effort that's involved. The filing periods are the same. Okay, they're both monthly. The required online filing, that's just trying to take advantage of modern technology. Okay, so that's something that we're now in position to hopefully do because we've been working on it to do for room tax. Special event doesn't apply to marijuana. De minimis doesn't apply to marijuana. And then the prohibited acts, there are the same prohibited acts in marijuana as there are in alcohol. So really the focus would be on one-time registration rather than recurring, initial filing fee, and surety bond. Those are the 3 areas. But we felt there was a huge distinction between a brand new industry, cash-based, which, some may survive, some may not, versus a very established alcohol industry that is, we don't have the same concerns when they accept cash, credit card, whatever. It's a different dynamic. So that's our rationale for it.
Whenever you share that information with Ms. Davidson, please talk to me.
Okay, sure.
Yeah, you can send it to everyone. I think
Yep.
might as well. People can ignore it who are interested.
Thanks.
Okay.
Mr. Peterson?
Thank you, Mr. Chairman. And, many of the people that will be selling alcohol, whether they're bars, restaurants, or wholesale licensees, have been closed down for several months, many of them. And I've heard anywhere between 20 and 80% are expected to fail, depending on whose numbers you believe. So I think anything we can do to reduce their costs of them submitting this tax is a good thing. We don't want to throw extra expenses at them when they're trying to figure out how to keep the lights on right now. And so I'm with you on this one, Dan.
Okay, thanks.
Thank you. Ms. Kennedy?
Thank you, Mr. Chair. My question is kind of more about specific scenarios that where the tax might be applied and might not be. So without seeing exactly what is in the code yet, and I want to talk about the special events. I'm thinking about a couple of different situations that I know occur regularly at Chugach Eagle River. One is wine tasting events, where you're actually pouring individual glasses of wine. Then people drink that and they decide they like the wine or they don't like the wine. Anyway, if they decide they want to buy the wine in bottles, how does that work in terms of taxing? Is that something that's part of the exemption, or is there potential for having to tax some of that wine?
Okay.
And then I have another question.
Sure. So through the chair to Ms. Kennedy, that would fall under de minimis rule if they came to us and said their estimated retail sales for that event we're going to be less than $5,000. If they think it's going to be higher, $5,000 or higher, they will then need to go through a simplified registration process with us, and they'll have to post a deposit based on their estimated retail sales for that event. So that's how we would approach it.
Okay, thank you. And so it would really be up to the organization to decide if they had a way of judging that as to how much they would be selling. Okay, my next question then, kind of to follow along with that, in terms of the $5,000 limit, at what point are you actually taxed? If you go over 5,000, are you taxed for everything 5,000 and over? Or if you go over 5,000, are you taxed for the entire amount of what would be sold?
You would be, if your operation is going to be $5,000 or more, you're going to be needing to collect tax on every single retail transaction during that event.
Okay, alrighty. And then what makes the difference then between why that $5,000 mark then? If you're not going to charge anybody under 5,000, but if they go over 5,000, now you're going to charge them for everything. Kind of what was the thought behind that?
Well, it's a scale of operations. So if it's a big enough event going on, and some of these are recurring events throughout the year, we want to make sure to establish a relationship with those more sizable entities that also may repeat similar events in the future. So for us to get them more formally registered and for them to provide all that information, it justifies going through that formal process. So we just know that there's a lot of small, varied, miscellaneous events that occur all year long, and those are so small that it just doesn't make sense to us to try to track those down or to have them come to us. So it's really, we're trying to focus on where there's a significant threshold for this type of activity.
Okay, thank you. Thank you, Mr. Chair.
Thank you. Mr. Constant?
Yeah, so I'm kind of on the same vein of the special permit and back to that. Is it going to be up to the caterer who secures that license? How are they going to know, right? Because these are organizations that don't really do this. It's just a sidebar. Maybe some of them do it every year and they'll figure it out. What's our method for making sure?
They're going to need to identify who the licensed entity is that is authorized to sell the alcohol. And that particular entity is going to need to come to us in advance and to get sort of pre-authorization. They're going to need to display some type of signage that says they are a registered operator in the municipality of Anchorage, and then they're going to collect and then square it up with us later. So am I answering the question? Or?
I'm just trying to visualize it. So, like when you apply for a special event permit on the street or to park, you have to go through a process where you go to the permitting department, fill out the paperwork, start to go through the process, get everything finished, and then it gets circulated to all the departments. And so in that package, you get some guidance that says this is how you do it. But then there's this other set of events where a nonprofit decides or some organization decides they want to do an event, and it's kind of not. It's in on private property or some other entity. And so are we actually going to require those entities to come in? It doesn't square up with the practical reality of that.
We're only going to require if they estimate that their gross volume of retail sales is going to be 5,000 or more. So, we're not going to be going out. We're not going to be spending all our time looking for these little micro events, right? And a lot of times, if they do hire a caterer or something like that, that caterer is going to be familiar with what the process is. We're going to put it on our website what the rules are for special events and what that de minimis threshold is, and then people can self-assess and say, oh, I think we're definitely going to break that threshold, or we're going to clearly be below it. And that's I think the only really workable way we have to do it. So, okay.
Thank you. Ms. Kennedy?
Thanks, Mr. Chair. I guess another question kind of along those same lines in the special event category. I'm thinking specifically, excuse me, of how it works out at the Chugach Eagle River Bear Paw Festival. And a couple years ago, we started basically a beer and music event. It was an all-day event. You bought a ticket to get in, had your ID checked, and you were handed 2 coupons that were good for a beer at the beer truck that was stationed inside the parameter that was marked out. So how does that work then when part of that ticket cost a certain amount to get in, but it provided you with beer? And yes, we definitely went over the $5,000 mark on that one. So that would be taxed, but how would you go about actually taxing for something that is not specifically paying for the cost of a beer? So anyway, that one looks a little sketchy to me. It's kind of problematic, but had you thought about something like that, and did you have some policies on how that might be handled?
We did have specific discussion about that, and when we thought about the Girdwood Forest Fair as another example, similar situations where they have a beer garden and purchase tickets, that type of thing. The research we did of other jurisdictions, a lot of times in those situations, they basically subject the tax to the entire price of that ticket, whether or not you drink 0 beers, 1 beer, 3 beers, whatever it is. So that might be a route that we go. If the problem is you can't sometimes delineate or break down how much was actually alcohol versus maybe some appetizer or some other supplemental thing, entry fee, whatever you want to call it. We have more work to do in this area. It's detailed, but we will work out a standard approach for those types of situations. Our goal is going to be to capture the maximum gross sales that occur at those events. And if we cannot come to agreement on the delineation, it'll have to be the gross amount of the coupon ticket that was purchased.
Okay, thank you. Yeah, I'm going to have to think about that one as well. So thank you. Thank you, Mr. Chair.
Thank you. Mr. Dunbar?
Thank you, Mr. Chair. So 2 things. First, I know it might be complicated, but the degree to which you can delineate what percentage of that ticket is alcohol versus not, I think it would be better to only apply the alcohol tax to the portion that is alcohol. And I'm just sort of anticipating a year or 2 years from now the kind of complaints we're going to get from folks. And that brings me to my second point, which is, that being said, I hope you keep this exception kind of as narrow as possible and keep that dollar threshold relatively low too, because sort of counterintuitively, I anticipate that if we make it larger, it's actually the industry that's going to be most upset with us. I'm just thinking of the taxi industry, for example, being very upset with the operators of certain limousines, and they came to us with complaints because those limousine companies, or the tour companies rather, were not paying into the system everybody else was. And so I think if we make that exception too broad, ironically, it's the alcohol industry that will be most upset because they'll see other people abusing it and taking it away from their legitimate taxing business. Thank you, Mr. Chair.
Thank you. Ms. Quinn Davidson?
Thank you, Mr. Chair. Dan, maybe I wasn't following, but is it, so at festivals like that, where do the providers of, say you have a beer garden, do those providers of beer buy the alcohol at retail, or do they buy it wholesale? Because if they're buying at retail, or did you already say this? They pay the tax on it when they buy it, right? So so then you're just saying they would charge through the ticket, try to make back the money on the tax, or I'm confused?
I hear what you're saying there. We don't question where they get their alcohol from. So if they purchase it from a wholesaler, that's their choice. If they purchase it from a retailer, that's their choice. We do not have a provision, and it was very purposeful, to allow any type of exemption for a retailer purchasing from a retailer. There is the option to purchase from a wholesaler either individually or in some cooperative fashion. When we did research is a KPMG study. This is a nationwide study of beer association brewers. And what they said is the alcohol industry is a 3-tiered system. And it's manufacturer, wholesaler, and retailer. And it is an absolute standard that it is only licensed from one channel of distribution to the other. So we do not think that that comports or supports us having any type of exemption, accommodation, adjustment for a retailer voluntarily choosing to purchase their alcohol from another retailer. We did not want to get into that. It'd be very, very messy. So that's definitely not in there.
Double taxation, right? I mean, we
It
don't
is, but it's their own choice to double taxation.
So can anybody buy from an alcohol wholesaler? I mean, I've never tried to do that myself, but I suspect you can.
I don't know, but I do know that people can be creative and they can group their purchases. There's ways to get there. So it's not like it absolutely can't be done. And like I said, this KPMG study said that is the way it's supposed to be. So we're following that model. We're not deviating from that.
Well, I mean, we decide what model we're following.
But yeah, it's
your
a national
proposal,
standard.
yeah.
And it's true. It's been true forever in the alcohol industry.
Right. So did you talk with the alcohol industry about that when you guys went through these?
Yeah,
steps?
we did. Mm-hmm.
And they were okay with that?
They brought it up as an issue, but we explained where we're coming from, and that's what we rested on. I mean, there was no big dispute or, why should we do this? It's like people can find a way. They can find a way if they need to try to purchase from a wholesaler. That's outside of our purview. So.
Just seems like they could also demonstrate that they've already paid the tax and then not have to pay tax again.
It is so much more complicated than that, both from the retailer standpoint, from our standpoint. It's a huge mess. So it's not as easy. You can say, well, one-off, yeah, I can produce it. It's not that easy. It's very, very complicated. So we just do not want to get into that at all. It's not advisable.
Can you remind me if we are hiring any new positions?
Yeah, and I'm going to be getting to that in just a minute. Yeah.
Okay, because I'm wondering if they could be working on some of these things, whether it's this or the other issue I brought
as
up.
Alex said, we are a small group, and it is. We're lucky to even do the fundamental stuff. So it's.
But we're hiring new people.
We are.
Great.
Yeah,
So we might have some capacity to do.
I'd still say, even with that extra capacity, we're lucky to do the fundamental stuff. It is. It's a huge amount of work, and I'm not exaggerating. It's really, really huge. So if we can eliminate too many exemptions, too many special rules, we're much better off. And if we're sidetracked and going after all this little stuff, we can't focus on the big stuff, and then all of a sudden your revenues come down. So we're super sensitive to that.
Thanks. All right, so I'm going to go ahead and do 2 more comments, and then we have about 12 minutes
Sure.
left. So
Okay,
I'm
I
sure we
can
have
wrap up
time.
quickly. Yeah.
So Mr. Gates.
Thank you, Mr. Chairman. I had a couple questions, but I first wanted to respond to that recent conversation that Ms. Queens had. I believe that the EC regulations for alcohol really strict who wholesalers can sell to, so it would be very difficult for just anybody to try to get around using by wholesale. And so I think they can only sell to licensees that have beverage dispensary licenses and then retail type sales licenses. I would double check that though to make sure, but I believe that's very restrictive. So I had a couple of questions. One on the no bonding guarantee not being required up front, but when we review the application and see history or which terms, that's at the discretion of the department, is that right?
It's at the discretion of the department, but there are some specifics in the code that basically say some of the criteria or the conditions that might trigger us to require bonding.
And I see there's a lot of concern about the special events, and my understanding is that there's room to stay permits that the stay minutes exception might apply to. Once a caterer's permit, that can only be obtained by a licensee who already has beverage dispensary license. So like you said, we're familiar with all of that. And the other type of permit is the special events permit, which can only be obtained by nonprofits, veteran organizations, and so forth. And those are the ones that I've been told will be the smaller operations.
They should be smaller, yes.
Is that your understanding also?
That's my understanding, yes.
You looked at that. And I wanted to mention here that I see there's a lot of concern about how that would work in the enforcement. And I noticed in the ordinance you have the tax exception section 126540. You don't list the de minimis exception here, but you do have the de minimis exception in the certificate for installation requirement, or not requirement, gift of the certificate. But there's some reason you decided not to put specifically in the tax exemption section, the de minimis exception there. It seems to me
I think as Assembly Member Kennedy said earlier, it could be that the de minimis rule is contemplated, or maybe one special event, they're de minimis, but then later on in the year they do another event and they're not de minimis. So we did not want to put it in exceptions, because exemptions are more for permanent exemptions, and it's really very much situational whether or not the de minimis applies. So we didn't want to think people just get an automatic permanent exemption from de minimis.
Yeah, I think that exemptions are sort of policy determination. I think we could get somewhere there, and I would like to explore that a little further.
Okay,
We have
sure.
a bit of time to look into that.
It's really, and I'll talk about the timeline in just a moment, but it's very, very important to get done by the end of June. So if you can put something together between now and Tuesday, that's great, but we can't really afford to go any longer. So.
No, if there's small tweaks or
Okay,
changes,
sure.
we wanted all these rules that are the whole.
And I can send you the Word version if that helps. Yeah. Can I send you the Word version electronically, so you have that?
I might.
Okay, I'll
I'll
send
follow up
it.
with you after.
Okay.
I wanted to make sure the assembly members are aware, though. You could, for example, as under your policy decision-making powers, put exemptions here. You could exempt all special event permits, and those are all for one-time events. If that's a real issue here, you could do that. The proposition approved by the voters authorized taxing all alcohol sales. You don't have to tax them all. You're authorized to do so. You could exempt the ones that you think justify.
Our concern on that, Mr. Chair, is just that some of these special events are pretty darn large, and they can occur multiple times throughout the year. So we thought that was maybe too much of a assumption.
It's definitely sticky wicket.
Mm-hmm.
All right, so moving on. I know we have a lot of folks who are joining us on the phone for the next work session. So just want to let you know we're running about 10 minutes behind, so we will get to you soon. Mr. Constant.
Thank you. On the topic of the special events, two parts. I think I would be supportive of an exemption of nonprofit special events, not necessarily big corporate events that are money driven or oil driven or whatever. And so maybe if we do craft that, let's craft it tightly enough to be only those that are already generally tax exempt. And then to the point of getting your alcohol, how you get it taxed. Many of the events I've worked on, we just ask the entity who has the alcohol to give it to us for free. They do. And so there are a number of ways that do kind of work out. Most of the time we never paid for beer for the Fairview Block Party. We just had them given to us and sold it. And so there are a number of ways around it, but I do think that this is a very interesting area to explore. It would be nice to take people out of the key museums, art galleries, the Covenant House annual events, just to exempt those might be a wise thing.
Thanks. Okay, so with that, we'll go ahead and finish up the presentation.
Sure, let me finish very quickly.
Yeah.
Mhm, yep. Okay, so we are on page 8. There is also an issue of remote sellers. So some people get wine or beer from various sources outside of the jurisdiction. Because of the U.S. Supreme Court decision, the Alaska Municipal League created a special commission to try to capture remote sellers and this is more for general sales tax. We reached out to them and we said, well, what about our alcohol tax? And they said, yes, we could become part of that commission effort, and then they would then register these remote sellers. And if the remote sellers sell $100,000 or more, so they have their own de minimis rule, $100,000 or more of product coming into the state of Alaska per year, then that remote seller is required to register with the commission and collect and remit the tax. So we thought we don't want leakage if we can avoid it. So we're going to, if the Assembly approves Section 2 of the ordinance, it gives us the authority to start talking, negotiating, signing documents with the commission, and then ultimately get totally in the fold, and they would collect remote alcohol sales on our behalf. They take 8% off the top. That's part of their standard agreement, and there's a very small startup fee. So this is in the code, Section 2, in order to give us the authority to proceed working with AML, okay, with that commission. The last 2 pages, couple pages, the S version, this is just verbatim what is in the S version. If you end up having an S1 version, that'll be a separate thing. And the changes made, a lot of it came from Assemblymember Weddleton's very detailed review. We actually really appreciate how closely he looked at it. He gave us some specific things to change, and we went ahead and did that in the S version. That's what's summarized here. They're very technical changes, nothing of substance. The summary of economic effects is the very last part here, and this does show where there's two positions that are authorized because of this new tax. One is a desk auditor, one is a field auditor. We originally were asked about this, and we thought, well, maybe it could be pushed into 2021. As we saw the magnitude of what we signed on to here, we absolutely have to have staff in this year, probably by September. So we're going to work with OMB to hire 2 new staff to be able to accomplish this very large effort of work to get ready for February 1st. In addition to personnel costs, there's also one-time startup costs related to the database. Those are IT costs. Those can be fairly expensive, but that would, between $170,000, that could cover partial year of the new staff and what we believe the IT costs will be. After that, everything is ongoing, and it increases just with normal growth in costs. The revenues themselves, if you turn to the next page, you see page 11. This is the verbiage section of the SEE. This is the original SEE that was part of the ballot ordinance. And what it says here is there is a range of revenue. And so this is between $10 million and $14 million of a range. And this is also assuming just 11 months of activity in 2021. This range is, we picked the midpoint, the $12 million number. It could be below that, it could be above that. We also don't know with COVID-19 whether or not certain businesses may fail. Unfortunately, we hope that doesn't happen. But that would affect the revenues in 2021 if businesses are either closed or failing. So just wanted to put that caveat out there. Under private sector effects, we basically say in just sort of common expectations, the recurring filers and the people collecting 95% of all the tax are going to be bars, restaurants, and package stores. The special events would be in addition to that, and most sellers would be in addition to that. If you wanted to say, well, if everything is status quo and I bought an $8 six-pack of beer, how much more would it cost? It would be 40 cents more for that six-pack of beer. This is assuming everything else is status quo. This is a self-reported tax that the operator does collect the tax in the name of the municipality. It's a pass-through tax. So this is not an expense of the business. It is a complete pass-through tax. So whatever the businesses decide that as a baseline price for what they sell is their choice, but the tax is on top of that, and they must add that to the retail sales price. The last page is on page 12. This is the summary time on phase 2. So if and this, beg and please approve next Tuesday. If that does happen, then we go into phase 2. Phase 2 means we have to further develop our website, do a lot of different forms. That includes the application form, the tax returns, FAQs. That's going to go on for a number of months. We've already started that in June. In late June, after approval by the Assembly, we can then proceed with designing and developing the database. We cannot design and develop a database and have the rules change later. That would be a complete nightmare and a complete waste of money. So we have to have the rules in place and know that we're going to stick with those rules for the next 1, 2, 3 years, okay? We can't come back and change those rules after we've designed a database. And then the next third goal is July through August. That's when we hire new staff to have them ready by September. In the very tail end of this year, we would start at least 60 days before February 1st to pre-register the businesses. And also at the tail end of this year, once we're getting very close to the start date, we would start looking at documenting our operating procedures on how we're going to process things and how we're going to go about auditing businesses. The tax starts on February 1st, and then the first filing period is going to be March 31st. That's the last day of the month, and that's the month after activity, after retail sales activity. And that's it. So we recommend at this point approval of AO 2020-57S. If there's an S1, we will obviously let you know on Tuesday that we will provide the additional information you all asked for earlier. Prior to that, we can by sometime on Monday and make sure that the whole assembly gets it. And we just appreciate you trying to work with us on what we propose, and we did consult a lot with the industry, and we tried to strike a balance, as Alex said. So if there's no perfect answer here, but we did feel like we did strike a balance. So with that, I'll stop. Thanks, Mr.
Thank you. Mr. Constant?
Yeah, thanks. Mr. Moore, would you include in that email to everybody the total revenues gained from the initial filing fee for cannabis and tobacco stores so we can have an understanding of the scale of money?
Okay.
Thank you.
Thanks. Ms. Zolotel?
Thanks, and if there's any information about the database you plan to utilize for this tax, I'm really concerned about the flexibility of our electronic systems we put in place and that they can adapt and be adaptable. So I'd like to learn more early on.
Okay, yeah, and I'll mention, so you want me to just comment on the electronic filing part?
Well, whatever you said, whatever this database, you need to know the rules to set the database. I
Yeah,
kind of want to
our database is complex. What we have to do on the business side, it's actually very simple. It's almost every business has a POS system, point of sale system, with the ability to add tax. That is common.
Yeah, no, I'm
So,
not worried about their side,
okay.
I'm worried about our side. I keep
Okay.
hearing about inflexibility of systems, so
Okay.
I just want to know more.
Well, and it's a custom system, but it's custom based on the rules. So if you change the rules later, that's a problem. You have to redo all the work. So, yeah.
Thanks. All right, I'm not seeing any other questions. Thanks so much for the presentation. Looking forward to Tuesday.